Hi guys, I'd like to basically analyse the trading last night from the European Open session, and I want to give a shout out to Ingela Trainer last night. She had absolutely traded the market so well considering the conditions. And I put a quote up there saying, "Trade location is the best risk management tool we have. So start each trading day with pre-identified location for the day for your short-term, intermediate term, and longer term time frames." So leading into the day, we had some key levels that the market was at. And we had this, so we've got the NASDAQ chart here. And this is the 5-minute chart. So we've got this weekly major 50% level. All right, and as we know, those major 50% ranges, or those 50% levels on those larger ranges, can be powerful magnets. And price actually hit that magnet in the morning. In the Asia Open, we hit that level. And you can see here on the left, the S&P 500 is virtually in the same area. So basically last week, the market rallied back into this 50% zone after the sell-off the week before. So the market is pretty much imbalanced. And if you listen to the podcast from yesterday, the Trading Success podcast, we talked about how the markets, there's a lot of news this week. So the market's sort of just bracing itself for that news. So it's gone back into a balanced zone, particularly with a lot of uncertainty in the world at the moment. So let's focus in on what happened in this session last night. Now, if we look at the S&P 500 as a reference point, and I know some traders they specifically trade NASDAQ, but they look at the S&P to see where the S&P is at, because the S&P is, obviously the large index and it carries a little bit more weight. They're highly correlated, these two indexes. Are they doing the same thing all the time at the same location? No. However, it can be a good indicator sometimes if the market's at a major level. So we can see coming into the open of Europe, we can see that the S&P had pretty much gone down to the open of the day. So it recovered pretty much all of the movement in the Asia session was pretty much wiped out. So we had that rebalance of daily inventory. Now, the NASDAQ hadn't quite got down there. So some people could have been expecting this market to go down and clean the open up on open. However, it didn't quite play out that way. So if I just look at what the S&P got stuck at that level for quite some time, for probably the first half hour of trade. And what happens sometimes when people start a trading session in Europe, they're kind of really keen to get a trade in, right? So for instance, you might have people that go, right, I want to go long here, right from the word go. They want to try and reverse the market, okay? So if they're buying here, they're going to have a bunch of stop losses sitting under there. All right, just in a nice tight stop. So if you're buying here, all right, your stop loss is going to be a sell order under here. So you can have sells sitting in that location there. So I'll just type that up so you can know what I'm talking about. So you can have sell orders building up under there. Okay? And vice versa. If the market's trying to go, short, you're going to have sellers, all right, new sellers coming in here, and they're going to have buy orders sitting up here, all right. So I'll put that in here as well. So I'm going to put buy orders sitting up here. Remember, if you're shorting the market, to get out of the market, you have to buy back, all right. So if you're selling up here, or here, predicting the market to go down and clean up the open, you're going to have buy orders sitting up here. All right, so the market is just basically just shopping around here. Okay, so you would have buyers, trying to break the market up higher. Their stop losses are going to be sitting under here. You're going to have sellers trying to short the market here. So there's a real battle. And you can see, when you see this, there's basically just no one's winning at this point in time, right? At one point, something's going to happen. There's going to be a big change to the market. And when there's a big change to the market, then you can then start to look and see, right, what direction is this market going to go? Who's going to win this battle? Because you've got orders building up, so you've got liquidity building up on both sides, all right? You've got buy orders sitting up here and you've got sell orders building up down there because both sides are trying to move the market, but no one's winning at the time. So this is where liquidity is building, and this is where big players love this, because this is how they can really accumulate a lot of contracts. So if we keep going, okay, so we've got this two-sided rotation, and then we come up for half an hour of trading, the market's just going sideways. Market's trying to go out, and then here we see this big failure area here by the buyers. The market goes up, you get this big wick above. So that's a very strong sign that the buyers are weak and sellers are strong in this situation. Then we get a big breakdown here, right? So the market breaks down, and it looks like a lot of these sell orders get collected here, because you wait and you see what happens here. But this market, if you were short here, right, you'd have been going, oh, this is going to look great. This is going to probably head down to the open, and we're going to get a big trade back down to the open, because you may be targeting here and your stop loss is sitting up here, all right? But watch this. The market goes down, get a big response here by the buyers. So you've got the buyers chewing up all this sell side liquidity, all these sell orders, all right, sitting down here. So they get chewed up, and then the market just pops to the high side, and you watch what happens, right? And this is where Engler was very quick. I missed this trade, unfortunately, because I was out talking with the mechanic at the time. He just got home, dropped the car off, and then this market just pops up, okay? So a lot of our traders bought here and traded it back up to yesterday's high. Now notice also too, we've got this weekly 50% level up here. Now markets tend to act rotational around these 50% levels, particularly going into major news this week. The market's quite balanced, being a Monday. So we're probably not going to expect big movements in price today. And you can see the market has just opened, and look where the market has opened. You can see the clock's moving. That's following the price. So this is 8 o'clock. The market has just opened. You can see how we're just rotating around the 50%, right? So we're very much in balance on open. So the market could just rotate around this level. So it's a very high probability that if sellers have tried to move this market down, if buyers step in, we're likely going to go up to yesterday's high, but we're probably going to head up to the weekly 50%. All right. So let's have a look at what happens on the next candle. The market does, it just pops straight through. And you can see this is where all these sell orders are being picked up here, buyers moving up, and now you can see here all these buy orders sitting up here have created like a domino effect. All right, and now we're waiting for the sellers to come back in to exchange with these buyers. All right, now some of these buyers may have, obviously, when you get an influx of buy orders and not enough sellers, all right, price will really pop. So sellers probably aren't ready, strong sellers aren't ready to pop in right now, and that's why the market breaks high, because there's not enough matching or absorption of equality of sellers and buyers at those prices. So the market can pop a little bit, all right, until the sellers come back into the market. So leading to this session, when you see these complex retracements and nothing happening, it's just a sign that liquidity is building, right? And you just have, as a trader, you just have to wait, right? Because we're only in for such a small time frame, we can wait for the market to tell us what to do. We don't have to jump in and front run the market. So basically what happened in this situation here, when the sellers came down and tried to break out, we had that big move by the sellers, but notice there was just no follow through by the sellers. That is a very good sign that we're probably going to have an opposite reaction back the other way. And that's one thing you've got to be mindful with markets. If something happens and you don't get follow through, for instance here, you're expecting the market to potentially sell off and head back down to the open because we had all these levels down here, and the market fails, then you're likely going to get a very strong reaction going back the other way. And this is what we got. And we got a beautiful sell signal right there, or a buy signal right there. The market popped up. Then the sellers came back into the market. You can see we had this complex retracement here, all right? So we had the two legs by the buyers, and then the buyers just were not strong enough. So this market was very much in two-sided type trading, and then the market kind of just went sideways and grinded lower. So, you know, a lot of the times we're faced with these kind of market conditions. We're not always going to get trending type days. And I know our emotions and our, it's a Monday, we're all pumped up, we want to get in, get our money, get a trade in and start the trade in a really solid week. But the most important thing is that patience, all right? So having an understanding of trade location, where we are in the market, you can see here that, the S&P was failing at the open as well, all right? It was doing very, very similar activity. We were failing down at the 50% of the day here on the NASDAQ. So understanding the location on the larger time frame, understanding that we're in this balance zone, all right, on the larger time frames, and we've got bigger news coming up on the larger time frames as well. So, we're expecting the market to be a trending type day and trading really strong type trend trades was probably not the best way of managing your trading session. Looking for those short, snappy reversal trades back into the range were probably, the best way to trade. And that's exactly how Engler handled that session. We got one trade and that was it for the day. So I just want to show you how that liquidity works and to understand, when you understand the entire context of what the market's trying to do, or just have some understanding. Do you get it right all the time? No. But when you can see the behavior occurring with an overall context, it just allows you to be more patient, to sit back, relax, wait for the move, wait for the failure, and then take advantage of that. And, the market just played out perfectly. Anyway, I just thought I'd do this video because I think it's very, very powerful, and I hope you got some learnings from that. And just remember, we're going to be covering a lot more of this liquidity information in our Platinum program coming up in June. If you're interested to find out a little bit more about Platinum, we talk a lot about not only just price action, all right? Price action we do a lot in day one, but day two we do a lot of work on volume analysis as well. So liquidity zones, volume profiling, those sorts of things. So it's a little bit more advanced from just the essentials course. So there's a lot more to it, but we'll cover a lot more in understanding how liquidity works as well. If this video is a little bit much for you at the moment, I can understand it is quite difficult concepts to understand, but once you do see it and you understand it, it really makes a lot of sense, and you go, oh my God, this is sort of like an aha moment for a lot of traders. So like I said, if you're interested in learning a little bit more about this, we'll be covering this off in the Platinum program in June. So if you're interested, just reach out to IDTA and, speak to one of the team, Pete or Glenn, and they can tell you a little bit more about the program. All right. Thanks, guys. Have a great day. Bye for now.